Yo, what's up, YouTube world? It's your boy BCloud87 checking in, and I'm back to let you into my Robinhood stock market investing account. Now, today, I want to talk about 4 mistakes that beginning investors make when they're trying to jump into the stock market. So, if you like this video, I want you to be sure to hit that thumbs up. And if you're not already subscribed to the BCloud87 channel, don't forget to hit that subscribe button. Let's go ahead and just check out the current value of my portfolio so we can see what we're working with today. I'm sitting at $22,613 in the stock market. Today was a green day, so as you can see, I am up a little over $100. But for the past week, I am still in the red. I'm down $149. For the past month, I am also down $278. But for the past 3 months, I'm up over $1,100. And for the year, I am still up over $5,700. Now that comes with just remaining consistent and disciplined and just consistently averaging into the stock market, which means just consistently putting more money in the stock market and just, never stop investing in the market. But with that said, let's just go ahead and, like I mentioned, we're going to cover the 4 mistakes that beginning investors make when they jump into the stock market. Now, the mistake number 1 is trying to time the stock market. Now, there's a saying that goes, time in the market is much better than timing the market. And another saying is, the best time to get started in investing in the stock market is yesterday. The next best time to get started investing in the stock market is today. So, with that said, if you have not already been investing in the stock market, don't worry. Don't necessarily kick yourself. But if you can't do it right now, do it tomorrow. Because like I said, you probably should have been doing it yesterday. But what that means is just the longer that you have your money invested in particularly good quality companies, as those companies continue to go up and make profits, so will your money. Unfortunately, many people, they feel like they can just time the market. Oh, well, I'll wait for it when the market goes down, when the market's red, everything. And then, I'll just jump into the market and I'll try to buy up as many good quality stocks as I can on the low. And then when the market goes back up, I'll just sell and take my profits. It doesn't always work like that. Sometimes a bear market can last a bit longer than you expected. And by bear market, I mean red days. And by red days, basically I'm just talking about all the overall stock market being down. You can never necessarily time the market. Yes, you can use certain strategies and certain, history, to help you as far as to predict certain things. But that's the thing, the market, it can be very unpredictable. And especially during a time like this, again, trying to time the market, as you can see, I'm down for the week and even down for the month. But for today, I'm up. And then for the past 3 months, I'm up big. And for the past year, I'm up really big. Again, I'm just really just trying to hit home at just you can't time the market. And, if you're continuing to just, wait or, I want to wait again for things to lower in the price before I jump in it. No, it's just best to just jump in. You don't have to necessarily use all of your money that you have, but you do want to get into the stock market. You do want to build the habit of just, again, continuously, putting a little bit of money in, one day, maybe the next day, maybe 1 week, maybe the next week. But the overall goal is just you want to develop a consistent habit of investing in the stock market, because again, as I mentioned, the longer that you are investing and again in good quality companies, the better you're going to be in the long run. It's not a get rich quick scheme. It's definitely a marathon. So again, don't try to time the market. You want to be disciplined, you want to be focused, and you want to be in it for the long run. I know that's how I am. The next mistake that beginners make when they start investing in the stock market is buying too many speculative companies. Now, by speculative companies, I'm referring to the smaller cap companies, which are the companies that They don't necessarily have a proven track record. Many of these are brand new companies that, just kind of popped up, or, maybe the new trendy things that are perhaps in Silicon Valley, or even just, some of the brand new stuff that kind of the fly by night companies. Yes, a lot of times you can experience big growth in those companies, but 9 times out of 10, you're going to do much better if you invest in good quality companies that have been able to stand the test of time. Companies that I'm referring to are like Johnson and Johnson. This is a company that's been around for a long time. And as you can see, for the past year, they are up 11%, but for the past 5 years, they're up 39%. Good quality companies that again, they were around when your parents were children, or probably even when your grandparents were children. So like Johnson and Johnson, Coca-Cola, things that are going to be around forever. That's what you want to do. You want to get companies that have been around for a minute. Bank of America. Bank of America has been a bank for a long time that many people have used, as far as, again, like your parents, your grandparents, things that have been around for generations. Walmart, another company, has been around for a long time. You want to, again, just get companies that not only have been around actually, but also just the really big dog companies as well, the blue chip ones. And by those, and then I'm talking about like an Apple. Apple's definitely a big dog company. Apple has $1 trillion market cap. Go ahead and check out, like, as far as Apple, their growth within the past year, over 31%. And then for the past 5 years, Apple has grown over 400%. Apple's a big dog. Apple isn't a speculative play. Microsoft, again, this is another big dog. This can be a pillar in your portfolio. Yes, these companies, they're going to be a bit more expensive, but you're going to have to pay for good quality. You don't want to just have your portfolio filled with a bunch of the cheap stocks, with a bunch of the penny stocks. You want to buy some companies, again, that are going to be some big dogs, not only ones that have been around for a long time, but ones that are just basically like revolutionize the game, as far as revolutionize our way of living, and that we can foresee continuing to keep progressing in the future. The Microsofts, the Apple. I feel like Tesla is also another big dog company. As you can see, Tesla's been up 85% for the year, and for the past 5 years, up well over 1,000%. So again, not any of these fly-by-night companies. You want to get, again, some big dogs. Here's another one, Nike. Nike can also be considered as a pillar. Nike is a huge brand worldwide. They make some of the best shoes out there. You definitely want to get, some Nike. Again, it's okay to have a few speculative companies in your portfolio, because those are some companies that you can definitely experience some growth with, but there's a good chance, though, those companies can also fail, and then you'd be left holding the bag. Many times people will get these speculative companies, kind of pump them up, and then just sell them off. And again, you don't want to be that cat that's left holding that bag. You want to get the good quality companies. Again, I know they can be a little bit more expensive than other ones, but that's just like your best way to hedge, your investments, and to make sure that your money grows, because those companies are going to grow too. So definitely get some big blue chip companies to be pillars of your portfolio. Number 3, third mistake that beginning investors make when they start investing in the stock market is not diversifying your portfolio enough. Me, myself, I own about 30 to 34 companies. Some may say that may be too many, but me, I say I'm diversified when it comes to investing in the stock market. I own technology companies, pharmaceutical companies, communication, materials, industrial, consumer staples, consumer discretionary, just a number of different things. You want to be diversified when it comes to investing in the stock market. Yes, the technology plays are really kicking butt, and lots and lots of money are being made by the more of the technology companies, but there are times when those big technology companies, when they take hits. Facebook, for example, I believe Mark Zuckerberg is in hot water. Apple also was in hot water not too long ago due to, data breaches or even, sharing information. So believe me, the big tech companies are not necessarily immune to volatility. But again, just the best way to kind of balance that is, again, to be diverse. You definitely want to be diverse. Again, I have the technology. I have the financial plays. That's my HTGC. That's also my Bank of America. Those are, as far as, my finance companies. I have the Realty Income. That's ticker symbol O. That's real estate. You want to be diversified. And then I also have the S&P 500 ETF VOO. You don't get more diversified than that. That's basically a basket of companies that are, that you can invest in the stock market. I got Starbucks, as far as, for consumer goods, Nucor, that's NUE, that is a industrial or material, one of those. But again, this just goes back to my point of being, as far as diversified. EPD, that's an energy play. REXR, that's a real estate play. I got Comcast, Coca-Cola, that's consumer. JP Morgan Chase, that's JPM, that's a financial play. Caterpillar, I got J&J Pharmaceuticals. I got Walmart, Procter & Gamble. I got Pfizer for my pharmaceutical play. Again, just a number of different companies. You want to be diversified. Again, it's okay to have a particular favorite sector. It's okay to, really like the real estate companies. It's okay to have, lots of real estate companies in your portfolio. It's okay to have technology companies in your portfolio, or even pharmaceutical. But again, you want to be diverse. You want to be able to touch many sectors, because again, when one sector can be taking a hit, the other sector can be going well, and then that's how you balance out your portfolio. So you definitely want to be diverse when it comes to investing in the stock market. And the fourth and final mistake that many beginning investors make when it comes to investing in the stock market is by thinking that investing is going to make you rich fast. I'm sorry, I kind of worded that very weird. I meant by thinking that you're going to get rich quick. That's actually what I meant. Again, it's not a sprint, it's a marathon. You have to be willing to invest for the long run. As you can see, this is 1 year of my gains. So basically, investing back in, let's see, what is that? October 2nd, 2020, when my portfolio was at 17,000, and now it's at 22,000 again. And this is gains. This is my gains throughout the past year, and this is my gains throughout the past 3 months. I'm definitely, again, not a fly by night type of investor. I am investing for the long run. That's the way how you want to play this game. You want to be in this for the long run. You want to do something today that your future self is going to thank you for. By investing in these companies and holding them for the long run, you can leave these for your family. You can leave these for your children, because we're not going to be here forever. But many of these companies, like I said, they will be able to stand the test of time, because many of us, we're going to need a lot of these type of companies just throughout our lifetime. So it's not a get rich quick scheme. Unfortunately, I know many people who think, oh, okay, I'll just toss $100 in right now and then into the stock market, and then I'll pull out like, $500 the next day or within the next week. It doesn't work like that. It can if you're, are a professional trader or some amazing trader who can predict the future or anything like that. But no one can do that, no matter what they say or no matter what you think. You have to be willing to invest for the long run. Again, time in the market is always going to be trying to time the market. And then another thing is just, it's not for the weak of heart. If you're going to get into stock market investing, you're going to have ice water in your veins. You're going to be able to stand the the bad times as well as the good times. And just, that's the way how you want to be a really good stock market investor. So yeah, those are just the 4 mistakes, again, that many beginning investors make when it comes to investing in the stock market. So, even if you're making some of these mistakes right now, if you're new, don't worry about it. The best thing to do, though, is just to never give up. And also just make sure that you pivot. Like if you do realize that you are making some mistakes, some of these beginner mistakes that I just mentioned, the best thing to do about it is just to pivot, is just to, okay, rebalance your portfolio, get focused, and then just make sure that you heed, some of the words that I said, and then you start making the correct moves. You don't want to just, be stubborn and continue to keep making these bad moves. You definitely want to have a good game plan. You want to execute and be disciplined. So again, just as I mentioned, those are the 5 things as far as the 4 mistakes. And I reiterate them again. Trying to time the market, you don't want to do that. Buying too many speculative companies, you don't want to do that. Not diversifying your portfolio enough, you don't want to do that. And then the last thing, thinking that you're going to get rich quick. It's not like that. Like I said, it's a marathon. So yeah, just as much time as you can in the market, that's the best way to do it. Buy good quality companies, that's the best way to do it. Make sure you're very diversified. You want many sectors. And again, it's a marathon, not a sprint. So I hope that helps. Again, if you like this video, hit that like button. And if you're not subscribed to the BClar87 channel, go ahead, subscribe to the channel. Lastly, if you're not investing in the stock market using a Robinhood app, go ahead and click that link in the description. Download the Robinhood app and start investing on your very own. And if you want to get some Bitcoin, I'm going to have a Coinbase link in there too. Go ahead, hit that link, and you can start buying some cryptocurrency. You get $10 worth of Bitcoin as well. Other than that, peace everybody, and thank you for your time.